Besides, the markets have started slipping very slightly. The Sensex down by 40 points, the Nifty down by about 10 points or so. So it's promising to be a choppy day. But today is a Tuesday, and on Tuesdays we take up all your mutual fund queries in Mutual Fund Watch. Amit Gupta, VP Country Head Retail Sales with Taurus Mutual Fund, is with us to help answer your questions. So let's get started right away and take up the query that we have from Projit Bhattacharya. He's a lawyer in Kolkata. Mr. Bhattacharya, what's your question?
Anisha, can you repeat it? Your voice is not clear.
Mr. Bhattacharya, what's your question?
My question is, I have invested 3 lakhs in the 2007 August in SBI Mutual Fund, balanced growth. At that time, my NAV was 38. How long should I hold it? Actually, I want money to buy a book, book a flat for me. I'm afraid that the situation at present, it may not go too much high. What should I do? I will hold it or sell it.
Right.
I can wait for a couple of months.
All right. So you purchased SBI Balanced Mutual Fund. So when you made the purchase in August 2007, what kind of returns were you looking at?
No dividend. It was a balanced group. At that time, NAV was 38.
All right, let's ask our guest on what you should do with the SBI Balanced Mutual Fund. Amit, what would you recommend he do? When he purchased the units, they were priced at around 38. Now, thanks to the recovery, he's making a small profit. NAV is somewhere around 41 now. Do you think it could head to about 42, 45 in the next couple of months? Should he look to redeem his units then, or should he redeem his units now?
I shall suggest the investor to hold on. It is an irony, while investor is putting money in SIPs, investing with a very short term. Any investment made into SIPs have to be meant for a long term, and more importantly, the investor has to lower down the return expectation. If an investor is expecting a 30% kind of a return expectation, that too from a balanced fund, I believe it is asking for a little bit more. So first of all, the mantra should be to invest for a long term. Maybe the time horizon should be 10 years plus kind of a thing. And then the return expectation should be a 12% kind of a CAGR. So at the end of the 10th or 15th year, the investment amount, even if it is a small every month, will accumulate to a much larger amount. And that is how you make reap the benefits of a SIP. So investors should hold on, stay invested, and have a minimum of 5 to 10 year kind of a time horizon.
Okay, 5 to 10 years, that's a long term, really long term, and a real investor that you would see in the markets. Let's now ask Vijay Nagpal for his question. He joins us to talk about it. Vijay, what's your question?
Yeah, I'd like to do an SIP of say about 5 to 10,000 a month for a period of 7 to 9 years. Which equity diversified fund would you recommend?
How long did you say you want to hold on to invest?
A period of 7 to 9 years.
Okay, that sounds pretty good. Amit, what would your advice be? Is this the good time, or is it always a good time to invest with such an horizon, about 7 to 9 years, as he said, and if you're looking for an SIP?
I believe SIPs are always, there's always a good time to start investing into equity markets, because it is very difficult for anybody to time it. And SIPs are the tool where you need not to bother about the market levels. You can invest at any point of time. So my suggestion to the investor will be to invest immediately through SIP mode. Stagger your investment for a long term. I will reiterate, at the risk of repeating, SIPs are meant for a long term. People have to have a 10-year plus time horizon, and that is how you reap the true benefit of a systematic investment plan. In terms of the return expectations and all, and if you look at the history of mutual funds which are there in India, most of the schemes have delivered a return of upwards of 15% in their SIP schemes, which ultimately becomes a much larger sum if you look at the end of maybe a larger time period. To give you a perspective, anybody looking to invest 5,000 rupees for 20 years, and even if he gets a 16-17% kind of a CAGR, that amount becomes to 1 crore rupees, and that is how you reap the benefit of cumulative compounding. So investor should invest into equity market without looking for the time levels or the corrections to come in, and stagger their investment out, and that is what the best way of investing into equity markets.
Give us some names. He's willing to put in his money for a long time, 7 to 10 years. What should he put his money? Where should he put his money?
See, he should put money into equities, which is what we are suggesting. If a gentleman is going for a systematic investment plan, he should look for a funds like multi-cap or a mid-cap fund, which are a little aggressive in terms of their portfolio composition. There are little gyrations which are SIP is best suited to take the benefit of that. So looking at the current scenario, I shall suggest him to go for a lot of multi-cap funds which are performing very well, and the mid-cap fund. From Taurus stable, we have Taurus Star Share, which is doing exceedingly well, and infrastructure. And there are funds with other AMCs also which are into the multi-cap infrastructure related kind of area, which are supposed and scheduled to do very well. And we believe India is into a very strong structural bull market. The economy is doing very fine, and we need to invest into a scheme for the investors which are focusing on domestic consumption or domestic infrastructure play. So there are a lot of stories which are there, and investors should look for these kind of stories to make an investment.
Okay, among the NFOs that are currently on offer, all the Reliance Infrastructure Fund, the Birla Sun Life Capital Protection Fund, the Baroda Pioneer Treasury Advantage Fund, all of them, what would you recommend, any in particular that you'd recommend that investors look to put in money?
See, all these NFOs are meant for a different class of investor, different set of investors. So if you speak about capital protection, it is basically for people who don't want to risk their capital and want a moderate return, while an infrastructure fund, which is a pure equity fund, is meant for people who are looking for a higher return. So it depends upon the profile, the risk return expectations which the investor has got. If an investor is willing to take a calculated risk and want to invest into equities, I believe infrastructure NFO is the right one, and maybe he can invest into ongoing schemes as well. And investors who are conservative in nature can look for the schemes like capital protection or a bond fund. So it entirely depends upon the investor risk return appetite and on which kind of asset class is he looking to invest, and based on which he should invest into the NFOs or the ongoing equity schemes or ongoing any of the schemes.
All right, Amit, thanks so much for joining us on YSL, giving us your views on mutual funds and what investors should be doing. In fact, Ashu, you know, in the current bull run, number of people even in ELSs have started breaking even. So number of them are getting tempted to even redeem their options now if they're out of the three-year lock-in period.
So possibly Amit's words would be good for them if they probably hold on for that longer period, and he gave that example how a smaller amount can compounded over a period of time get to that crore, that magical figure of a crore.
It's tough to forget the last 1 year when you've seen the negative returns. This is what our mutual fund analysts keep telling us. Look at a 10 to 15% return over a longer term period, and don't think about the year or two of losses that you will see. But that's all the time we have on buy or sell. Remember, tomorrow we will take up your FNO queries. So start sending them to us. Type in BOS and then follow it with FNO and send us your questions right away on 56388. And it's now time for Samina to take us through all that is developing during the day.
Right, thanks so much, Anisha. Of course, yes, it's time for for Profit Newsroom now. We'll take you through exactly what's happening in the markets. The market's not actually looking very directional, rather, and also all the corporate action that's picking up this afternoon on Profit Newsroom.
This is NDTV, and you're watching NDTV Profit.